Thank you for joining iMeet. When you hear the tone, you will be the 21st person to join the meeting. This meeting is now being recorded.
Check. Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. Today we're going to quickly review the last couple of days in the market, see what's going on. So we broke out to some new highs last week. We're going to look quickly at a couple of the indicators and indexes, and then what we're going to try to do is go to some different modules on the Market Edge website that I use that I think can be very useful to you as far as when you're looking for new ideas and new stocks, new sectors that may be in the process of getting ready to break out to higher prices, or break down that you should have had before, and you may want to look for short candidates. Okay, so quickly let's go to the last couple of days here. What we had last week, we ended up with the NASDAQ making that to a new high, but in general, it was kind of a rough week for the indexes. We sold off fairly hard on Monday and Tuesday, and then we kind of had that big rally on Friday. We had the Russell 2000 and Dow Jones Transportation Index fell below their 50-day moving average on, I believe, Wednesday and Thursday. But even with that weakness on that Friday's run, we had the NASDAQ and the NYSE AD line, which I consider a leading indicator, punch out new highs. The CTI at the end of last week was a minus 13. Momentum index was neutral at 0, and also the sentiment index was neutral 0. Bullish sentiment, according to Investor Intelligence, again was another red flag. We had a 19-month high on it of 61.8% on the percentage of bullish investment advisors. That's a contrarian indicator because what it tells you, if everybody's bullish, there's no one else to jump into the market with fresh money. So that continues to be the fly in the ointment as far as jumping into this market. The sectors were mixed last week. Actually, the defensive sectors, consumer staples, utilities, and real estate, I believe, and I think materials no, not materials. Anyway, consumer staples and utilities were two of your better performing sectors, while industrials, materials, and energy lagged. The financials were basically kind of flat, even despite their big spike up on Thursday. So week ended up mostly flat with the NASDAQ at a new high. The Dow Jones was back, finished back above the 20,000 mark here. And as we move on, we want to see how much momentum or if there's any negative divergence is showing up. So we're going to look at 4 indexes real quick, and then we're going to go to a couple of trading ideas for you to try to find some new ideas. Okay, the big thing that sticks out here is you are starting to see some a little bit of higher highs and higher lows on the different indexes. However, again, the momentum just keeps showing this negative divergence. You're kind of just with different indicators. You can also draw in trend lines to see when they break or break through the upside or the downside. This is still momentum index, negative divergence. You had this thing breaking out to a new high, then going sideways. The momentum has just kind of slowed down, got a little bit of a pop here, and again, we're just kind of running out of bed here. The MACD continues to be showing some negative divergence. However, I do like this. This is a little bit of positive divergence on this side. So if we do get another click, it may point to the fact that maybe we're getting ready to have another leg up. And also, besides the negative divergence here, we talk a little bit about this. Connie Brown, technical analyst, talks about when you use the 14-day RSI, you want to make sure that the thing stays above 40, and that has happened during this sideways action. If this would break down to like 35 or so, that would be bearish for the broader market. So far we're this little negative divergence kind of going sideways in most of these things, but we are starting to see a little bit of pickup in some things, and we're not seeing a breakdown. Stochastics got down here to about 50. This is the 30-day, and it gave another buy signal, which is a positive for the Dow going forward from here. The S&P 500, kind of the same thing. You are starting to walk up this little bit of a trend line. You come down to this pivot point, which is right around 22.75. You get down there and you see buyers coming in, and it gapped up on Monday. Here's today. We're kind of stuck in the sideways range. But again, you have the negative divergence coming in here, but we did stay above 40, which is bullish. The 30-day stochastic is still trading up here around the 80 level, which you want to see. That means that the trend is still up. And you also see a little bit of positive divergence here in the MACD on the histogram. And we may get a little bit of a buy signal here if we can start going forward on that. So 22.50, which is right down here on the 50-day moving average. If we get a sell-off that takes us down below that, that's going to be where you start to have a little bit of a different trend, and that's probably where we see people start to pick up on the selling. As far as the target goes, if we can take out 23.05, you probably have some upside to about 23.30 on the S&P 500 going forward from here. Okay, the Nasdaq still looks strong. Again, you've got the higher highs, the higher lows. Looked like maybe we're going to get into a wedge pattern, a rising wedge pattern, which is bearish, but broke out to the upside. Now you're finding support across that trend line. Everything looks good on the RSI. Stochastics look fine. CCI, I wouldn't really call this negative divergence over here with everything else going on. So, plus the MACD is also bullish, and this still remains the strongest of the indicators on here. As far as the Nasdaq goes, the pivot point is 55.60. Don't really see much. You haven't even tested that in a couple of weeks. No negative divergence. As far as the next upside target would be 57.23. And we'll see if we can take that out if we keep on moving higher in here. Today we are up, let's see. Yeah, we're up again today. We're up 56.81. So again, we're moving up higher into that 57.23 target area. The last index we're going to look at real quick, and this one's still a little bit trouble. This is the Russell 2000, the small caps. It led the way on the way up. It's been going sideways to down, and it's actually in a series now where we're making lower lows and lower highs. If you can see these two trend lines, the negative divergence coming in here. If you want to have something positive out of this, at least you're staying above that 40 level on the 14-day RSI. And you did almost got oversold back in here, but you've been able to bounce back to the 30-day stochastic. You're kind of neutral on that, kind of neutral on the MACD too, but you're getting a little bit of positive divergence on the histogram with that. And you're also, it seems like every time you get down into this 50-day moving average, which you briefly broke on Thursday, bounces right back to that. Today we're flat, just sitting right on that 50-day moving average again. So keep an eye on that. That might get some attention, but I think you're going to have to go down here to about 1340 before you really start to see anybody get too worried about that. So again, the markets, even though our market posture remains bearish, which we'll go into a little bit at the very end about the CTI and where I think we are. The markets basically, to me, look kind of neutral to maybe slightly higher. I don't see a big breakout going on in here, but we'll just keep an eye on it going forward. All right. What I want to show you today is I've got a couple emails in about where people can find some different trading ideas besides just the money runner and some of those. And I want to show you an area that's in the advanced tools module called point and figure breakouts. Now we also have the industry group analysis in there, but I want to show you how to use point and figure charts and what we give you as far as pointing out what segments of the market look good, what markets are breaking out, what segments of the market are on the verge of breaking out, and how you can find some different stocks in there for trading ideas. Okay, if you're not familiar with the point and figure charts, they're one of the oldest charting methods in history. They were actually used by ancient rice traders to figure out supply and demand for pricing rice. They consist of X's and O's. Let me show you one just while I'm talking here so you can kind of look at this. Okay, this is a point and figure chart over here. It consists of X's when the stock or index is going up. When it's starting to trend down, you'll get a series of zeros. Now what's interesting about these things is they don't take into consideration any time value. But what we've done for you is we will put in 1 through 9 to just kind of give you a little bit of feel of the time segment. That 1 starts out for January, 9 is September. Then we throw in A, B, and C, so you get a little bit of September, October, November, October, November, December, just so you'll have some idea of where the breaking out is. So what you want to try to find out in point and figure charts is they're very easy to find support and resistance levels. You can also draw trend lines on them. What happens is as the market or stock goes up, every time it goes up anywhere from a penny above the next value, you get an X. But it takes 3 to the downside before you're going to switch gears and start to head down. Now, one thing that's interesting about these things, let's say we're 77 on this stock here. The trade's at 77.01 during the day, but it ends up at 68. You'll still get a green box. As long as you make that next step up, you get the X. Now, the next day you'll start your series of O's. But what this will do is just kind of keeps you in the trend of the market. Now, they've done some work on these things where you'll have like triple breakouts. If you have X, 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 here's the third one, and you get a break above that, you usually get a pretty nice move on this thing. In this case, you get a quick 4 points. Over here, this is a double top breakout. We have one. The second one comes up, and as soon as you trade higher, you get the breakout over here. You can get these things up to a 4 or 5, 4 or 5 X's in a row here. That just shows you the significance of this resistance or support zone. And then when it finally does break, the more X's you have across here that's breaking out, usually the higher of a move you want. In fact, sometimes people will have a stock over here where it's trading up near 86 and never seems to go through that. They decide, well, I'm going to sell it. And then when it finally does go through, it blasts through here and goes up, maybe $7, $8, or $9. Now, if you have a stock sometime that you want to sell, go ahead and take a look at the point and figure charting. And if it's over here, okay, then you can say, well, I'm going to put a stop down here instead of selling at 86. I'll put a stop in down here around 82 and sees what happens, because this is such a resistance area that once the sellers are depleted, you'll get a nice move to the upside. So it's just something to take a look at. There also has been some work in the past about when stocks break through a double or triple top move. With the double top, usually if you buy 80% of the time, it's profitable. On a double bottom, usually it's 82% of the time, it's going to work its way lower. The average gain for a double top is 38% over an 11-month period. For a double bottom, usually you get a 22% fall in the stock over a 4.7-month timetable. If you look at triple tops, percent of time profitable can go up as high as 87.9%. Average gain is about 28.7%. That's over 6.8 months. A triple bottom, which we saw, we're over here. This would be I'll show you there with triple bottom. Oh, here's a triple bottom here. Like normally that's there's a 93.5% chance that stock's going lower. The average loss is about 23%. That's over a 3.4 month period. So these things do work, and they've got some good history behind them to back it up. Okay, anyway, so we're in the Market Edge site. You go over here to Advanced Tools. You click on point and figure breakouts or early alerts. It'll tell you what you want to look at. If we're long the market, you're looking for buy ideas. Let's look at the double top breakouts or the double bottom breakouts if you're bearish on the market. In this case, I pulled up today point and figure top breakouts, and this is going to give you a list of stocks. Basically, they're going to show you all the stocks that broke out to the upside yesterday. We give you the formation, whether it was a double top, triple top, or a quadruple top. And then we also show you what our opinion is. Now, with point and figure breakouts, you always want to trade in the direction of the trend. Now, if we have like this Eagle Pharmaceuticals, we have a double top breakout, but we have an avoid on the stock, that's probably not where you want to look for a buy candidate, because what you normally have in that case is if the trend is lower, you probably have an oversold stock that had an oversold bounce, and you had a double breakout, and it's probably going to reverse itself and head back lower. But any of these that are long have a nice. We'll also give you the power rating to show you that whether they have some good momentum behind them. Also, that we'll give you a whole list of stocks. Now, if you go over here and click on one of these ideas, in this case we have Cardinal Health. Come over, take a look at the second opinion. You'll notice up here the trading activity, it's going to tell you that yesterday it had a point and figure double top breakout. The stock was up $1.10 yesterday. The stocks a buy, a little bit overbought according to stochastics, and we give you your comments. But now let's take a look at the chart. Okay, we've had a lot of selling going on from here, 78 down to 64 over the last 2-3 months. Two months over here, January and February. We've come up to this 76 point, and we actually finally yesterday broke through to the upside for an upside breakout. So this may be one, didn't have a big move. This may be one that you want to take a look at because healthcare, we talked about last week, was one of the ones that one of the sectors that we like in this area, along with the consumer staples. It seems like it's putting in a bottom and should be able to work higher. So Cardinal Health would be a definite buy candidate for you to take a look at. Okay, now here's another one that we looked at. This is a quadruple top. Not sure why it didn't show up on the top there. Something happened there. But anyway, so this would be Hasbro. If you watched Hasbro yesterday, you saw it had a quadruple top. Okay, if you own Hasbro and you're thinking about buying this thing and you own it, or you own it, it's around $86 or $87. Okay, this $87.50, $88 range was huge resistance on that stock going back into November. Every time it would get up there, it would hit it, bounce off, hit it, bounce off. And then when you finally got the breakout, you had a big move in this thing. Now, one of the ways when you get something like this where you have a big consolidation of the stock, if you count these X's and O's sideways, here we got 1, 2, 3, 4, 5, 6, 7. We have 7 boxes going across. If you take the last row of X's and count from here, 1, 2, 3, 4, 5, 6, 7. Worst case on this thing, you'd have expected the initial pop to go to $90. In this case, we got up to around 96, 97, but that would give you an upside target if you're looking to buy one of these things before the breakout. So Hasbro yesterday, quadruple top, maybe one you want to look at. In this case, it's already had quite a move. You may want to wait for this thing to fall back here where resistance would be, or support back here around $89. But anyway, again, you can count sideways here, these congestions, and it'll give you a little bit of a target. Okay, now, this is kind of something that we also have in here. Now, this is one to the downside. You'll see here LGI Homes. And if you're bearish in the market, you're looking for some short ideas, LGIH is a symbol, and we had a point and figure triple top or triple bottom breakout yesterday. Okay, we have an avoid on the opinion. We came up here, made a new high, reverse direction, bounced, came down here to the 29 support, bounced again, and then yesterday it broke out and traded below that, came down to the $27 area. And this probably is going to, if the market gets soft in here, you can have a little bit of support down here around 24. Get down here below that, the next support comes in around 19. Now these boxes, if it are one box up to make a new X, but the three box reversal, which means if it traded at 33.5, it would take a trade down to like 28.5 before you're going to get a row of circles over here to come in there. So if you just have like a $1 or $2 drop in the stock, you're going to still be in the uptrend. So it'll keep you in there despite a little bit of selling. But in this case, you had that triple bottom breakout. As we talked a little bit before, a triple bottom breakout. There's about a 93.5% chance that this thing's going to go at least about 23% lower, which would be down around this 21 area over the next 3 or 4 months. So this still might be a candidate, especially if you get a little bit of a dead cat bounce here, to look for a short idea. All right, now here's a little bit of kind of something that we look at, where I think you may have some interest in. Now, what would it be worth to you if you had a day before time? I could give you a list of stocks that would break out today, not yesterday. But I'll give you a list of stocks that if they trade at a certain price today, they're going to break out. Now, if any of these stocks that's going to trigger a double top or triple top, quadruple top, we'll let you know what the opinion is, what the power rating is, and also over here it says new. That means not only is this stock coming up into the breakout price, but it's coming up there with some momentum because it just showed up yesterday and is working its way into that breakout price with some good oomph behind it. Now over here. In this case, we're looking for some buy candidates. The top, we list these for you by the closeness to the breakout price. Okay, here's Newmont Mining. NEM is the symbol. If this thing would trade at $38 today, it's going to break out of a double top pattern on a point and figure chart. We're long. It's got a power rating of 82. You know, a pretty strong candidate. And what you want to do on that is, if you get, you put your ticket in here like at 38.05, something like that. Because you don't want to just buy this thing at 38 and wait for it, because it may come up there and may take three to 6 months before it actually break out. So what you want to do is you come in here, you put your ticket in, say at 38.05, and if it trades up there, you're in the stock and you actually buy that breakout. So if you did it with Mattel, you'd have gotten picked up yesterday at the breakout price and made 13, 14 bucks. Okay, today we look at Newmont Mining. It traded a high of 37.78. Okay, it didn't break out. So you had your buy ticket in here at 38.05. You didn't get in, and the stock's trading down 50 cents right now to about 37.48. So your ticket's still sitting there. Maybe tomorrow we get a little bit more in the mining stocks. You buy it tomorrow on the breakout. You know, like I say, if it trades sideways in here for the next 3 months, you don't want to own it. But if it does do the breakout, that gives you an opportunity to buy it as it breaks out, and you're front running thousands of chartists who you know, trade off of these things, you know, to look at it. Now, if you look at the point and figure chart over here, here's a second opinion first. You know, we're long. Here's the comments. Stocks to buy, a little bit overbought. It did have a pullback today because the stochastic spread 100 after yesterday's move. We go over here to the point and figure chart. Again, we're right up there. At that, if it trades at 38.01, you get this. You're going to buy the thing. Looks like the next resistance level is probably going to come in around 43. Okay, you pick up maybe you know, 8 to 10% jump in this thing if it does break out. That's a good trade for you, and you have the statistics to back you up a little bit, you know, to buy this thing. So that's one idea for you. Here's another one on the downside. If you're bearish in the market, we also give you a list of stocks that if they trade at a certain breakout price to the downside, this will give you a stock that's fallen out of bed. Now, these things, usually when they break through the support area, you get the drop in them. In this case, we looked at AbbVie. Okay, AbbVie, we have an avoid on the stock, scores -1. Stock is not a short sale candidate, according to second opinion. And you come over here and we look at this point and figure chart. Boy, what a mess. Okay, between, say, 59 and 66, you're going back and forth on this thing. You can see here, if it breaks below this 59 level, you've got triple bottom breakout. You should get a fall down here to 56, maybe even down to 52. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You have 12 boxes of congestion in here. So if this thing breaks out this way or this way, it's going to have a heck of a move. Add that 12 from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Down here, if it breaks below this 59 area, you probably have yourself a trade to at least 53, 54 to the downside. If I was going to trade this thing because of all that heavy congestion, I would probably look to, you know, maybe put a buy order down here at 59 because it's been able to hold here since last May. Here's, you know, May, June, July, August. It's been in this congestion area now for about 9 months. You might want to buy here and then put your sell stop. If it does break out, you're out of there. You don't want to be in it, but you might be able to get in here with some a buy on stochastics and get yourself a trade from 59 back up to 64. You know, maybe it keeps going sideways for a while, but you can use them for that also, besides just buying them breakouts on these things. Okay. Now another thing I want to talk about. Okay, besides the different stock ideas. Okay, I'm looking at this thing. I'm not sure where I want to go in the market. Do I want to go look for tech stocks now? They've had a heck of a run. Like we talked about healthcare and you know, consumer staples. They're starting to show improvement last week. That's areas that you want to look for buying ideas. But what if we take a look at these breakouts or the early alerts, and we try to find out what sectors or industries or indexes the traders ETFs are getting ready to break out. Okay, we pull up our list from before as far as what's going to break out, and we come up here and we take a look down here. Let's see if we can see any you know, ETFs that are in sectors or something like that. Okay, we have a momentum factor, which is, this is a momentum stock ETF. It's buying all the stocks that are probably the FANG stocks and that kind of thing. So momentum stocks seem to have some pickup here. I'm not real familiar with this. But you go on down here a little bit, and all of a sudden we see, here's Peru. EPU is the symbol on that thing. It's getting ready to break out if it trades at 36. Okay, that's an idea. Maybe we look at that. But you go a little lower, and all of a sudden you see here's Wisdom Tree Emerging Market Equity Fund is also getting ready to break out if it trades a little bit higher. Go a little bit lower, you have the Vanguard Emerging Market ETF breaking out. Okay, I've got three. If I'm looking for somewhere to put some new money, this thing's telling me right now, as far as supply and demand goes, emerging markets may be a place for me to put some money at. The trend is long on all these things. The power rating looks good. Okay, I may want to take a look at that. Even India's comes in down here at the bottom for an emerging market. But this is telling me that not only just one stock, we've got a whole segment of the market that seems to be coming up close to breaking out over here. Okay, this is the emerging market. This is the one, this is DEM is the symbol, David Edgar Mary. Okay, it looks like a nice bottoming pattern in here. You could almost look at it almost like a head and shoulders, reverse head and shoulders. This thing trades up here at above 40. You have a nice breakout, and you could get a trade up here from somewhere into 40 up to almost 48. So it's got some good potential on the upside before it's going to run into resistance. But if you take a look at this, it doesn't look like a long time. But this has been trying to break out of here, out of this range for almost about a year and a half, about a year and a half on this thing. Now, if you look at the regular chart, you're over here ready to punch out new 52-week highs. If you look at this thing going, boy, has this thing moved too high for me? I don't know. It's had a big move already. Well, not according to this. You go back here and you look at this. It breaks out to this new high over here, and we could get a run up here almost 15, 20% on that DEM. So you can look at that. When you're looking at this thing, and you can take a look at it again. You're gonna stumble on this over here if you think I don't want to buy something that's breaking out to a new high. But this is telling you that even though it's at a new high, you still want to go in here, and this is a segment of the market where you could probably make some money. Okay, I've kind of gone a little bit long again, so I'm going to try to wrap this up. But I look at these breakouts on the point and figure charts one or two times a week, especially the early alerts. Because like I said, you're going to front run thousands of different point and figure charters that use these charts for ideas. And the advantages are it's very easy to see support and resistance areas. Again, here's resistance. Here's support down here. When it broke through the support, you wanted to be out of it. So you would know that when it broke through this, if I'm long, I'm getting out. So it comes down here, and now we got our reversal. As it traded sideways over here, not doing much, but we finally got a little bit of a breakout here, and we're having another breakout in here. You can draw trend lines like that coming up from this way. You can draw them going down this way, for down trend lines like that also. But there's a book that I read years ago that you may have some interest in. You can usually find it on Amazon or something. It's called How I Made $2 Million in the Stock Market. And it was written by a guy back in the 50s called Nicholas Darvis. And in the 50s, he worked for the circus or something like that. He was a traveling guy. And he ran just the point and figure charts off of these things. What he would do is he'd call his broker, and if he saw a chart like this, he would put it by and say, buy me this. Back then it was in eighths and something like that. They'd buy it at 41 and an eighth, put my stop in down here at 36. Okay, and he would just buy these things with a sell order. If he had the resistance, he would put the sell order here, but he would also move his sell stops up as he found support and resistance levels on that. And he'll show you in this book that was, like I say, it was written in the 50s, and he'll show you all these different trades that he did, how he moved his stops up, and how he worked his portfolio using just point and figure charts to put in orders. And for back then, he started out with something like with $15,000, $20,000, and it was over a couple of years he made it again into $2 million. So it's an interesting read to see how he did that and how they were executing the orders back then. And it's worth the read if you have if you have a little bit of time, and he has some good charts and pictures in there of what he was buying. So again, just to wrap it up, if you're looking for ETFs or sectors or maybe small cap indexes or something like that, of the segments of the market that maybe haven't broken out yet, You want to find out, you want to buy something as it is breaking out, or maybe something that's found support that's bouncing up. These point and figure early alerts and breakouts are an area that I think are very important. If you can finally get a chance to use those and work those into your daily, or at least once or twice a week, to find fresh ideas. Okay, I'm going to try to get to some questions here because we have some now. If you have any more questions on the slides that we did today, just send an email to the doc@marketedge.com, and I'll try to get back to them. And I'll try to see what we have up here. Your pointer's not showing up on my screen. I forgot to put the little pointer up thing on here. My fault. That little blue. There we are. I apologize for that. So I could have shown you. Hopefully you'll see that when you have the double tops and the triple bottoms and all that. Again, I apologize for that. But does anybody have any questions on any stocks or any questions about what we went over? I don't see anybody typing, so I'm going to go ahead and wrap it up. I appreciate you joining me. As far as the CTI goes, we're still looking at when are you going to change market posture? That's a good question. As far as the CTI goes, let me go all the way back to the Dow Jones over here. Okay, it's not an exact science, and we are scheduled to probably go to a bullish position over here. It's Nicholas Darvas, D-A-R-V-A-S, for that book, How I Made $2 Million in the Market. Okay, we went to a buy over here for the last part of the CTI, and they pulled back a little bit, and then the market took off. And we kind of expected to see this thing probably roll over one last time to reset the CTI. Now, we went bearish over here December 23rd, which is right about here. And we flipped it, to the bear side. We're kind of going sideways in this thing. It's working its way up. It was 19,933. Right now we're at 2094. So we're off about 100 points from where we went bearish. I could put a neutral in here, but what I want to see over the next week or two is if we start to show some downward momentum. If we don't, we're probably going to go ahead and we'll lose a little bit of money on this call and go bullish. And one of the reasons is that you always look at the cycles in hindsight. And going back in hindsight, this may have been the end of the cycle. It ran off so fast from that, when we went off this bottom, that we thought originally it might be a blow-off top. You're going to get this thing here for the new policies, and then you'd start down again. And so you had the big volume and all like that. That was kind of a buying, sell-off top, and boom. But here we ended up coming back, and it's still going on. So we could be neutral in here. If we start to see some downward momentum, it could pick up. Then we would reset here. But if we don't get that, and we continue to go sideways for another week or two, then what I'm going to do is I'm going to reset this as the beginning of the 4-year cycle. It's in the time horizons. This would have been a shorter cycle for the 4-year deal. And then we'll start here. And that means that we would have been bullish from here, and that we would remain bullish probably till about May. If I go, if we don't get the downward pressure in here and we go to bullish, again, I will move that back to here, and you'll just figure that we'll probably be in a bullish market posture in the late spring. We could consolidate some more, then take another leg up. We'll find out here, but within the next week to 10 days, this thing's either going to start to roll over, or we'll switch to the bullish posture. If you're in the leveraged CTIs, you're off a little bit. The main thing that hurt us was the NASDAQ, but we made 70% last year, so we give up 3-4% on this call. I don't think we're going to kill you on that, and then we'll probably roll over to the bullish leverage deals going forward from here. But whether we switched here or whether I was wrong and we move it back, you're still going to be. We'll be back in sync once we get over here towards the end of February and go from there. Looking at AMD on the point and figure, what's it tell us? Let me look real quick. Okay, over here at $12, when a lot of people were thinking about getting out of it, when it traded up here at 12.01, it was a double top breakout, and you've got another high up here. Now this is going to be kind of tough to give you a target on this because there's nothing really to the upside here going back to 2008. There's not enough congestion over here to give you upside targets. You have an upward trend going up through here. Now, one thing to remember, once you go below $20, instead of having a three-box reversal, a whole box $1 up, they go in 50-cent boxes above, below $20. So you'll get another X up here. You get another 14.51. You'll get another X. So it's going to move that way. But if I was going to put a stop in here, I might put a stop in at. It's a little tough. You may want to. I would probably give it room to come back down here to at least around $12, somewhere around that, maybe just 11.90, something like that, and let it run for a while. And it would move up over here. Some point, move up as this thing. If the thing reverses, you can move it up. But I wouldn't want to give it away because you've had quite a move. But I don't see any indication as far as that goes. Let me look at the regular chart on it. Again, you're making new high. You had kind of a reversal here, which is, you want to see that's a little bit of a bearish move, which means you could get come back down here. Come back here at 12.76. Next resistance level was 11.57, 11.58. I probably would, if it came back down to 11.60, 11.75 area, I might have a stop in that area. You're overbought by most of these indicators, so you could come back down here. The pivot point down here is 10.50. If it goes below 10.50, some of these people that are in from over here, they're probably going to be jumping out. So that's about it. I'm going to go ahead and close this thing down. And again, if you have some questions, feel free to check on it. I'm sorry, I didn't share the screen on this thing. I apologize for that. But again, the main thing you want to look at, below 10.50, you have a little bit of a turnaround on that. So I'm going to wrap it up, and I'll talk to you guys next week. Thanks.